And now with the latest business and market news, it's over to Jayne Edwards.
Thanks, Alan. Wall Street was in a contrary mood on Friday, with investors lifting the indices in response to worse than expected jobs figures, and the Dow closing above 11,000 points for the first time in 5 months. The payrolls report showed a loss of 95,000 jobs last month, but investors took the grim news as another sign the Fed will be forced to add stimulus to the economy, and therefore bought up stocks with relish. On commodity markets, gold gained ground but closed below its record reached on Thursday, while oil closed up over $82 a barrel. The jobs data had the opposite effect on the US dollar, which hit a 15-year low against the yen. The Australian dollar finished just below 98.5 US cents. But in a positive development, the yuan reached its highest closing level since its revaluation 5 years ago. It all happened as this weekend's IMF meeting was getting underway in Washington, with policymakers under pressure over the actions of many nations to devalue their own currencies. Looking at share markets over the week, the US, Europe, Japan and Australia all jumped by 2%, while Europe rose by 1%. With more on local news, here's Marcus Padley.
Well, a good week this week, and that was despite a slow start. There was a holiday on Wall Street on Monday and a holiday in most states. The ASX 200 is now at 500 points from the year low. That's about 12%. It's still down about 4% on the year, though. We saw three major events this week. The first was the RBA meeting, which surprisingly left interest rates on hold. The second was some better-than-expected Australian jobs numbers, which raised the chances of an interest rate rise on Melbourne Cup Day from 40% to 66%. And the third was the Aussie dollar, which made a lot of headlines after it almost hit parity, certainly hit a record high. It's up 21% in 4 months since June the 7th, which was noticeably the day a massive rally in metal prices in particular started. And it's worth saying perhaps that the major risk to our market at the moment is that the US dollar starts going up, in which case those commodity prices will start going down. BHP and Rio had a good week. That was despite talk that their joint venture in iron ore was dead. Rio has now outperformed BHP by almost 10% since BHP announced their bid for the Potash Corp. We saw Leighton Holdings continue its rally, a rally that started when its major shareholder was bid for, putting a 53% stake in Leighton's up for grabs. Woolworths closed their $700 million share buyback on Friday. We'll see the official announcement of the price and any scale back tomorrow. We saw Fairfax up after the announcement of a $300 million share buyback. And Sundance Resources, the company that tragically lost its entire board in an aircraft accident in the Congo in June, shot up this week on the back of the announcement of a new managing director from Sinosteel. Notably, when the accident happened, the share price was 13 cents. It's now almost 30. Winner of the week this week was Northern Energy Corporation, up 58% after a takeover approach from New Hope Corporation. And loser of the week was Nido Petroleum, down 11% after putting out a market update.